Did you know that a significant chunk of the world's wealth is tied up in real estate? It's a staggering fact that often goes unnoticed. It's not a coincidence. For centuries, people have viewed owning property as a path to financial security and even wealth. The dream of homeownership has been passed down through generations. There's something tangible about it. You can see it, touch it, and even live in it. This physical presence gives a sense of stability and permanence. This makes it different from stocks or bonds, which can feel abstract and intangible. Real estate investing has a certain allure. It feels accessible even to those who haven't dipped their toes into the stock market. The idea of owning a piece of the earth is universally appealing. You're dealing with something real, something you can understand. It's not just numbers on a screen, it's bricks and mortar, a place where memories are made. It's a home, an apartment building, a piece of land. Each property tells a story and holds potential. This tangibility is a big part of why real estate investing attracts so many people. The emotional connection to property cannot be underestimated. It's a way to take control of your money and put it into something concrete. You can see your investment grow and evolve, but like any investment, it's not without its risks. Market fluctuations, maintenance costs, and other factors can impact your returns. That's what we'll explore in this essay. We'll break down the complexities of real estate investing. We'll delve into the potential rewards and the very real risks of real estate investing. Hearing from those who have succeeded can provide valuable insights. We'll look at what it takes to succeed and how to avoid common pitfalls. Whether you're a seasoned investor or just starting out, there's always something new to learn. One of the biggest draws of real estate is the potential for passive income. Rent checks rolling in each month can supplement your day job or even become your primary income stream. This idea of making money while you sleep is a powerful motivator, but the appeal of real estate goes beyond cash flow. Historically, property values have tended to appreciate over time. This means your investment could grow significantly, building wealth and securing your financial future. Then there are the tax advantages. Real estate investors can often deduct expenses like mortgage interest, property taxes, and depreciation. These deductions can significantly lower your tax burden, making real estate an even more attractive investment. But perhaps the most enticing aspect is the independence it offers. You're your own boss. You make the decisions. You choose the properties, set the rents, and manage the investments. This level of control is empowering and can be incredibly rewarding. However, it's crucial to remember that real estate is not a guaranteed path to riches. While it can be lucrative, it requires a lot of knowledge, effort, and sometimes a bit of luck. Like any investment, it comes with inherent risks. You need to be aware of these risks before diving in. The market can be unpredictable. Trends that seem stable can change rapidly. Prices can go down as well as up. This volatility can affect your investment returns, and managing properties can be far from passive, especially if you encounter unexpected problems. Maintenance issues can arise at any time. One of the biggest risks is dealing with tenants. Tenant management can be a full-time job. Difficult tenants can lead to late rent payments, property damage, and costly legal battles. These issues can be stressful and time-consuming. Finding good tenants is essential, but it's not always easy. A thorough screening process is crucial. Then there's the risk of market downturns. Economic conditions can change quickly. Remember the 2008 housing crisis? It was a stark reminder of how quickly things can go wrong. Property values plummeted, leaving many investors underwater. Foreclosures became common. Economic recessions, local job losses, or even changes in interest rates can impact the real estate market in unpredictable ways. These factors are often beyond your control. Don't forget about the costs. They can add up quickly. Owning real estate isn't cheap. There are many ongoing expenses to consider. You'll have mortgage payments, property taxes, insurance, maintenance, and repairs. Each of these can be significant. These expenses can quickly eat into your profits if you're not careful. Proper budgeting is essential. Investing in real estate requires careful planning, research, and a realistic understanding of the risks involved. It's a long-term commitment. It's not a get-rich-quick scheme. Patience and diligence are key to success. The 2008 housing crisis serves as a stark reminder of the risks associated with real estate investing. Fueled by subprime mortgages and lax lending practices, the market became overheated. Housing prices soared to unsustainable levels, creating a bubble ripe for bursting. When the bubble did burst, the consequences were devastating. Millions of homeowners found themselves owing more on their mortgages than their homes were worth. Foreclosures skyrocketed, sending shockwaves through the entire financial system. Real estate investors were hit hard. Those who had over-leveraged themselves with multiple mortgages faced financial ruin. Property values plummeted, wiping out savings and retirement accounts. This crisis highlighted the importance of responsible investing. It underscored the need for thorough due diligence, conservative financing, and a long-term perspective. While the market has recovered, the lessons of 2008 remain as relevant as ever. Section 5. Navigating the market strategies for success. So, how do you navigate the complex world of real estate investing and increase your chances of success? Knowledge is power. Start by researching your local market. Understand the trends, the demographics, and the economic factors driving property values. Location, location, location. This age-old adage holds true in real estate. Investing in areas with strong job markets, good schools, and desirable amenities can significantly impact your returns. Develop a sound financial strategy. Determine how much you can afford to invest without putting yourself at undue risk. Explore different financing options and choose a mortgage that aligns with your goals and risk tolerance. Consider working with a real estate agent experienced in investment properties. They can provide valuable insights, help you find the right deals, and guide you through the negotiation process. Section 6, From Struggle to Success, a real estate comeback story. Let me tell you about Sarah, a single mom who decided to dip her toes into real estate investing. She was determined to create a better future for herself and her child. She scraped together enough for a down payment on a small duplex in an up-and-coming neighborhood. It was a big step, but she believed in her vision. She figured she could live in one unit and rent out the other to cover her mortgage. It seemed like a perfect plan to ease her financial burden. Things started well, but then her tenant stopped paying rent. This unexpected turn of events threw a wrench in her plans. Sarah, already stretched thin, had to cover both mortgage payments while navigating a lengthy eviction process. It was a daunting challenge. It was a stressful and financially draining experience. She felt overwhelmed but knew she had to find a way out. But Sarah didn't give up. She was determined to turn things around and make her investment work. She learned from her mistakes. She attended seminars, read books, and sought advice from financial advisors. She implemented stricter tenant screening procedures and joined a local real estate investors group for support and advice. This network became invaluable. She slowly built up her portfolio, acquiring more properties and refining her management skills. Each new property was a step towards her goal. Today, Sarah owns several rental properties and enjoys the financial security and flexibility that real estate investing has provided. Her hard work paid off. Her story is a testament to the importance of perseverance, learning from setbacks, and building a strong support network. Sarah's journey shows that with determination and the right support, success is within reach. Section 7. The power of patience and planning. Real estate investing is a marathon, not a sprint. It requires patience, planning, and a long-term perspective. Don't expect to get rich overnight. Be prepared to hold on to your investments for several years, even if the market experiences short-term fluctuations. Develop a comprehensive business plan. Outline your investment goals, your target market, your financial projections, and your exit strategy. Having a well-defined plan will keep you focused and help you make informed decisions. Don't be afraid to seek professional advice. Consult with a financial advisor, a real estate attorney, and a tax professional. They can provide valuable guidance and help you avoid costly mistakes. Remember, real estate investing is not a passive endeavor. It requires time, effort, and ongoing education. Stay informed about market trends, changes in legislation, and new investment strategies. Section 8. Weighing the scales, pros, cons, and your financial blueprint. Real estate investing can be a fantastic wealth-building tool, but it's not for everyone. It's essential to weigh the pros and cons carefully and determine if it aligns with your financial goals, risk tolerance, and lifestyle. On the plus side, real estate offers the potential for passive income, long-term appreciation, and tax advantages. It provides a hedge against inflation and allows you to build a tangible asset you can see and touch. However, it's crucial to acknowledge the risks. Market volatility, problematic tenants, unexpected repairs, and economic downturns can all impact your returns. Real estate is also illiquid, meaning it can be challenging to sell quickly if you need to access your cash. Before diving in, assess your financial situation. Do you have a solid emergency fund? Are you comfortable with debt? Do you have the time and resources to manage properties effectively? Section 9. Ready to dive in? Real estate investing can be an exciting and rewarding journey. It offers the potential for financial freedom, but it's not without its challenges. Approach it with a healthy dose of optimism tempered with caution. Do your research, plan meticulously, and understand the risks involved. Seek guidance from experienced professionals and never stop learning. Remember, the most successful investors are those who are constantly adapting, evolving, and seeking ways to improve their strategies. Now, I want to hear from you. What are your experiences with real estate investing? What questions do you have? Share your thoughts and stories in the comments below. Let's learn from each other and navigate the world of real estate together.